Intel reported better than expected earnings on Thursday night, and we had literally 14 separate analysts issue new price targets, and 13 of the 14 new analysts ratings, they actually upped their price targets. So this is a sign that Wall Street has become increasingly more bullish on Intel in reaction to the earnings report. And you can see here that UBS increased their price target, JP Morgan, Wolf Research, Deutsche Bank, a lot of respected names. So this is really awesome to see. But let's take a deep dive into what these analysts actually said in their notes, not just that price target number. So Friday, after the semiconductor giant reported stronger than expected second quarter earnings and guidance, that led to praise from Wall Street analysts. And then we see KeyBank Capital Markets analysts said the company's client computing group benefited from strong demand for Chromebooks and high-end notebooks while also taking market share. And then we see TD Cowen analysts also praised Intel's client computing results, but pointed out that the good enough guidance could allow for the company to regain some momentum. Headwinds remain in the data center and AI group as cloud share loss, soft enterprise/China and AI shifts continue, but a cleaned up client channel is definitely encouraging. That was Ramsey from TD Cowen, who also boosted his price target to 38 from $31. And then JP Morgan analysts has an underweight rating on Intel, said the business is now moving into a gradual recovery phase, even as some parts are weak, notably networking and edge. Overall, we continue to be pleased with the company's execution, but want to see them execute high volume production/shipments of its Meteor Lake PC client and Emerald Rapids server platforms in the second half of this year. So they actually, even though they have a bearish rating on the stock, they have an underweight rating, they still increased their price target to 35 from 30. So, pretty much any analyst, if you were covering Intel, you raised your price target besides Rosenblatt, which honestly looks kind of stupid here with the $17 price target and the stock's at 36. So, Raymond James, UPS, Wedbush, Truist, all these respected names, Mizuho even, they are increasing their price targets on the stock, which is, in my eyes, a very, very bullish sign. All of these firms really are what the large institutions kind of look at to make investment choices. So it's good to see that their main source of information is increasingly bullish on the stock. So that's awesome to see. But with that being said, let's take a look at the company's chart and see if we can't give a price prediction on shares for the short term. And this isn't me making a call on anything fundamental for the company, just simply looking at the chart and making a prediction based on technical analysis. So with that being said, this is not financial advice, but let's dive right in. So we can see here on Friday, we actually topped out right where we topped out on June 20th. So I would want to see a break of this, semi-resistance level here. There's only really one touch point, so I don't want to say it's super strong, but it is significant that we topped out at this level, 2 days in the past couple weeks. So I want to see a break of this $37 resistance level before I kind of bought some short-term calls or try to play a breakout for this name. So be on the lookout for that level there, and then if we were to break that level, I see the next major level of resistance at about $43, which is where shares had bottomed back in February of 2022. So I think we could see a move up to this $43 level or 43.60 cents, as long as this $37 level is broken on Monday's trading session. So also, you can see that the daily moving averages, they're implying bullish momentum. We had the 50-day moving average cross over the 200-day moving average on May 9th of this year. And for those that don't know, that's called a golden cross and implies bullish momentum. So good sign there for shares. And like I said, we're trading above all daily moving averages, which implies bullish momentum for the stock. So, be on the watch for this $37 level. If we see a move above this level, we could see a significant jump to about $43. So that's kind of how I'm trading the stock. Just waiting for that breakout. And then let's take a look at how the stock trades on average typically. So this screen shows me which months the stock typically does well in, which months the stock typically does poorly in. And given that we have 50 years of data, I definitely do put some validity into this number. So currently in July, we see shares typically rise 2.1% in July. And July is actually the second best month in the stock's history. So that definitely could have exacerbated some gains over this July month. And then in August, shares typically rise 0.74%. So we're still in a bullish seasonal month. And then just keep in mind, September is the worst month for the stock's history, and we have that coming up. But overall, with this bullish technical setup combined with this August positive seasonality trend, definitely do think we see some more upside for this stock as long as we're able to break that $37 resistance level. With that being said, let's take a look at this article here written by Nostalin. I'm probably pronouncing that wrong, but it basically talks about the company's AI, part of its business, which I do want to cover, and I do think when you talk about Intel, AI is not talked about enough, in my opinion. You hear more AI in the chip space with NVIDIA and others, but I do think that this space is large enough where there can be more than one leader, as this article states. So Intel has maintained a consistent, if low-key, focus on GPU hardware focused on AI applications over the last decade. Intel's integrated HD graphics is built into most modern processors, ICs. However, these are insufficient compared to dedicated GPUs from higher-end inferences or machine learning tasks. In 2019, Intel acquired Habanon Labs, an Israel-based developer of programmable deep learning accelerators for the data center for approximately $2 billion. In 2022, Intel announced Gaudi 2 and Greco processing for AI deep learning applications implemented in 7 nanometer TSM technology and manufactured on Habanon's high efficiency architecture. Concurrent with Habanon Labs' Gaudi development, Intel has internally developed Xe GPU family as dedicated graphic cards to assess high-end inferencing or machine learning tasks, as well as traditional high-end gaming. Intel has many other AI projects underway. The Sapphire Rapids chip implements AI-specific accelerated blocks, including technology called AMX, Advanced Matrix Extensions, which provides acceleration inside the CPU for efficient matrix multiplications used in one-chip interfacing and machine learning processing by speeding up data movement and compression. Mobileye was acquired by Intel in 2017 and has been an early adopter and leader with over 20 years of experience in automotive, automated driving, and vision systems. As such, Mobileye has a deep resource of AI domain information that should be relevant to many applications. So the company has made massive investments into AI. They've obviously acquired a couple AI companies. So, this is nothing new for the company. They were acquiring AI companies, deep programming, deep learning companies in 2019. So before all this hype, this isn't a company that threw AI on its name and now it's trying to trade at an AI multiple. No, this company has been investing in deep learning for a long time. With that being said, though, let's take a look at how the company's valuation, how the company's financials look relative to peers. So we can see here that over the next 12 months, PE is projected to be at 59 times, which is well above the sector median and is also well above Intel's 5-year average. So Intel, when we take a look at the price to earnings ratio, we're definitely trading at a premium to where we typically have in terms of the stock's history. With that being said, let's take a look at this EV to sales number. So we see, actually, let's look at price to sales. So we see price to sales for the past 12 months at 2.8, which is below the sector median, which is good, and is basically in line with that 5-year average. So on our earnings, looking at the earnings, we are above that historical multiple. When we look at price to sales, we're basically in line with that multiple. And then when we take a look at price to book ratio, we have a price to book ratio of 1.5. For those that don't know, price to book ratio just simply puts the market cap relative to the book value for a company. So this is basically telling you that Intel's market cap is 1.5 times its book value, which is well below the sector median of 3.2, which is a good sign. And we're actually well below that 5-year average for the company at 2.4. So definitely a good sign to see that the company's price to book ratio is well below where the sector trades and well below the company's own history. So very solid there. Also, the company has a 3.3% dividend rate, which we do love to see. With that being said, let's take a look at some of the growth metrics for the company. So anytime a company's trading at high valuations, you always want to see that the growth is kind of rationalizing that high valuation. Unfortunately, we're not seeing that with Intel, to be frank. So year over year revenue growth is actually down 26%, which is obviously pretty poor. And this pales in comparison to the sector median, which grew at 11% over the past 12 months. And it's also below Intel's 5-year average of 2% growth. And then revenue growth is projected to remain negative, but kind of slow that negative pace. So we're projected to be at negative 7% for the next 12 months, which is well below the sector median of 9%. So once again, these growth numbers look pretty poor relative to peers and relative to the company's own history. With that being said, let's take a look at some of the profitability numbers for the company. So we can take a look at gross profit margin. For those that don't know, this tells a company what they make on what they sell. So it's basically just revenue minus cost of goods sold. So here we can see that the company has a 38% gross profit margin compared to the sector median of 28% and compared to the 5-year average of 55%. This 38% number is pretty bad and is definitely lower than the sector and lower than the company's 5-year average. In terms of cash per share, the company has $2 in cash per share, which is obviously a pretty insignificant amount, pretty much around 2% for the company. So only 2% of the market cap is in cash, roughly. So that's obviously not a great number for the company, but we'll take a look at the company's balance sheet in a second here. Let's see how this balance sheet kind of compares to the peers. So we can see that the company has $24 billion in cash compared to $49 billion in debt. So this means that the company has $24 billion more debt than cash. So this is honestly a worse balance sheet than Texas Instruments, Qualcomm, and then AMD also has more cash than they do debt. So really not loving this balance sheet here. Definitely feels like we're a bit overextended in terms of our debt to cash ratio. That being said, though, let's take a look at how the valuation ranks out from the peers. So yes, we're trading at a pretty high PE multiple, but that PE multiple is projected to drop significantly over the coming years. So I'm going to look at the PE non-GAAP for fiscal year 3, so 3 years out. So 3 years out, Intel is projected to be trading at a 14 times PE, which is below most peers and basically in line with the group. So valuation looks bad when you look at the past 12 months, but when you look at the forward-looking valuations, we look pretty solid. And then price to book ratio is at 1.5, which is actually the best price to book ratio amongst all peers. So valuation wise, I would say Intel ranks out pretty good amongst the peers. Growth wise is really where we see our issues. So revenue, the 5-year compounded annual growth rate for revenue has been -3%. And this is the second worst number amongst all peers, with Micron at -8%. So once again, growth numbers look bad for the company's own history, and they look bad compared to the peers. They look bad compared to the general sector. So overall, there's really no way to sugarcoat it. Growth looks pretty poor. And then gross profit margin also is the second worst amongst all the peers, which isn't great. And then net income margin is also second worst amongst the peers. So once again here, profitability numbers are below the company's own history. Profitability numbers are below the sector median, and profitability numbers are below the peers here for the company. So once again, growth and profitability numbers look pretty poor for the stock. So kind of to put it all together, the balance sheet looks poor relative to peers. Growth, profitability looks poor relative to peers. Valuation looks solid though, especially when you look out for 3 years and you look at that price to book ratio. But overall, I would want to see the company deliver on some more of its AI promises and really start to kind of move towards that nice valuation before we kind of dive in head first. So I want to see the company deliver on some of those promises. But this recent report is really a great step in the right direction for the stock, and the wide general consensus we've seen on Wall Street in reaction to that earnings report is definitely a very good sign for the company, and I do think that signals more upside for shares. And like I said, I'm just looking for a break of this $37 resistance level before I kind of think we get this move up to about $43.60 for the stock. So that's how I'm trading Intel. I do think the chart looks pretty good, just waiting for the breakout. And then fundamentally, I want to see the company deliver on a couple more of the AI promises before I went long in the stock. So with that being said, I hope you enjoyed the video. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.